In this video, I'll tell you exactly what a bull market is all about, and we're starting right now. Hey guys, Elliot here. So the term bull market is one that probably every investor knows about or at least heard of. But what is it exactly? What defines it? And how can you take advantage of and profit from it? Let's take a closer look, and by the end, maybe you'll view a bull market a bit differently. First, the definition. A bull market is nothing more than a term that describes a financial market in which the prices are rising or are expected to rise. Now the key here is the time interval. Securities rise and fall in value every hour of every day, and they may have a down day in a bull market as well. However, when taken as a whole over the course of several months or longer, the overall rise is taken to be a bull market. So you really need an extended period of time to call this, and a few good days won't do it, just as a few bad days doesn't mean it's over. Now, how much do stocks need to rise in this period of time to qualify for a bull market? Well, the commonly accepted threshold for the start of a bull market is a 20% rise in stock prices. But bull markets aren't just raw performance numbers. They are characterized by investor optimism, confidence, and expectations that strong results should continue for an extended period of time. So it's a bit psychological as well, with investor sentiment playing a role. So besides prices rising, what else happens in a bull market? Well, for one, stock market trading volumes go up as more investors buy and hold securities, hoping for some gains. Since there's more demand, there's also more liquidity in the market, making it easier to buy and sell for the price you want. There may also be increases in the dividends being offered as companies share the excess profits with investors. And finally, bull markets are a good time to have an initial public offering, or IPO, since a rising market may attract more buyers for the new offering. All in all, a bull market is what investors hope for. Investing is easy and everyone is an investing genius since everything is going up in value. Bull markets can last a while. In fact, the longest bull market stretch in the history of the S&P 500 was the one that started in March of 2009 as we emerged from the Great Recession, and it kept going until February of 2020 when the pandemic finally shut everything down. These 11 years were marked by strong growth, low interest rates, and optimistic investor sentiment. It was also a time that belonged to high tech, as just about every tech company we now take for granted came into its own. There were, of course, some corrections and pullbacks along the way, and no one really knew the bull market started in March of 2009, as that could only be determined by looking backwards at historical performance. But with the S&P gaining over 300% in that time, there was no doubt it was a monster of a rally. So how do you profit from a bull market? It's a timely question, as history will almost certainly repeat itself, and another such market is in the cards. Here's what you can do as an investor. Perhaps the best advice and the best strategy is to buy early and hold. This does require some confidence on the part of the investor, but buying at the start of a new bull market rally is really the key to selling high and reaping profits later on. You can also do what is called a retracement addition. A retracement is a brief reversal in the general upward trend of a stock, which is when you swoop in. So in plain English, you buy the dip. Day traders love bull markets as they can do full swing trading, which is a style of trading that attempts to capture short to medium term gains in a stock for a period of a few days to several weeks by using technical analysis to look for trading opportunities. Finally, if you're well versed in options, this is a time to write call options on popular stocks. If there is steady rise in prices, there will be plenty of interested options buyers willing to speculate on where these prices are going, and a big opportunity to cash in. So with all this talk of a bull market, it would be a huge disservice to you if I didn't also mention a bear market. Instead of prices rising and investor optimism high, prices are now dipping lower, and doom and gloom is what you'll find on Wall Street. If bull markets represent a booming economy, bear markets signal a weak economy with a possible recession in the horizon. Stocks can be purchased cheaper, and while you likely won't make profits unless you're a short seller, it's a good time to buy quality companies that are temporarily down in price. Finally, where did the bull and the bear come from, and why are they symbols of a booming or falling Wall Street? Well, the symbolism is said to have come from the way each of these animals attack their opponents. A bull thrusts his horns up into the air, while a bear swipes his paws downward. These actions signify the movement of a market. If the trend is up, it's a bull market. If the trend is down, it's a bear market. Is that a realistic explanation? Maybe, maybe not. I like it though, and that's the one we're stuck with anyway. Okay, that was a quick explanation of the bull and bear markets. As always, if you enjoyed this content, please do like and subscribe, and I will see you in the next video.